What's up, how y'all doing? TKD, we are back. Let's hop into the live session for the day. Go ahead and head to the screens and get active. Let me move this up right here. Hold on a second. Let me unlock. Oh man. All right. So we're waiting on a reaction with this pair, AUD CAD. We got the break at that key level that we were looking for. Right in here. So now what I want to do is place a limit order right here actually. Okay, right now just captured all of the liquidity underneath these session lows right here. So let me go ahead and just set this limit order on my terminal. Brian, I appreciate you, bro. I appreciate you, man. So with my terminal, I'm using Trade Locker. If you guys are trading on with a different broker or a different terminal, your coordinates may be slightly different. But what you can do is just take a look at the candlesticks themselves so you can get a better idea of where to place your order. For the guys that want to trade with us, it would definitely be beneficial if we all had the same broker. So when I call out the coordinates, it's less work that you have to do. Okay. Let me set these targets up. All right. TP1. So the entry price for this sell limit order is 0.90866. 0.90866, and our stop loss is going to be, let's put it above those highs right there. Stop loss is 0.90995. Let me get these targets up here on the screen so you guys can see those as well. It's TP3, TP1, and This will be TP2. Set an alert right here to let us know when price is heading towards our entry. Okay. All right. So we got that order in. Something is moving. Let's see. Whoa, is that U.S. oil dropping like that? So we took a U.S. oil sell. Cool, cool. Let's trap price on U.S. oil. So this is the area of range U.S. oil was trading within. Let me actually bring this up to this wick. So range is when you have Sean, what up, Doc? Pluto. What made me interrupt there? Pluto, I used that area for entry on, what was that, AUD, CAD? Because this entire zone up here was a major level in the market. Okay, we got all of these rejections right here at this level, so we're either looking for a break above and a retest, or we talked about a false breakout. That's when you get just a slight movement above range before it falls immediately back within that area of range. Now, in noticing that anytime you have consolidation like this and you get a break, whichever area you see that break, those places are normally retested. So instead of jumping in down here, because this is what'll happen, that takes your trade set up from I believe we were at like a 1-7 to a 1 to 1.87, which is terrible as far as your risk reward. So all of the trade setups that we enter, we want to always make sure that the risk reward is in our favor. So here, no, it's a 1-8. So if we wait here until price gets here, we get a 1-8 on that setup, which is way better. So I do it for the odds. We don't want to just jump in trades taking 1-2s, 1-1s, because you have to be extremely accurate to win with odds like that. So we don't play around like that. Let's see. Now, to give you an example of this same thing, I used this exact same concept this week on US 30, which everybody is afraid of, but same concept, okay? I was looking at this area of structure, this area of range right here. Price broke it at this area. I set a limit order. What day was this? Wednesday. Price wicked my limit order to let me in. Let me see. Is it considered a supply zone on the chart? Which chart were you referring to? But yeah, you can look at it like that. Supply and demand, support and resistance. It's all the same thing, just different terminology. Yeah, on the last chart, so that would have been, yeah, exactly. So we just identify those zones, the zones that people would call support or resistance. I just call them key levels or supply and demand. It's the same thing. When you identify those levels, you trap price and you wait until price gives you the truth. So versus guessing with your analytics, wait until you see the actual move, then we just wait on the retest. So we did that with US oil, with US 30, and this is US oil, the exact same setup. So let me go back to the highs. This was the original entry. So right down here, I put this symbol here just to let us know that this was a no trade zone. I looked at the exact same thing right here with US oil. Where's my highlighter? So we got this area of range. This is the break. On the 15-minute, I noticed the zone here. I placed that limit order there. We got filled Tuesday. And since then, we hit TP1, and it looks like we're still running. So even if we close that trade setup now, that's, hold on, this is the one. That's a 1 to 10 risk reward trade setup. So that's what I'm doing, maximizing my risk. Maximizing my gains with minimizing my risk. Let's see the previous chart. Do you put your stop loss slightly above so you don't get stopped? Yes, sir. I definitely put that stop loss right above that area. Yeah, okay, so that's cool. Not too many people know about liquidity, so I try not to say that word too much. But for the guys that don't know, liquidity is the areas in the market where traders place their stop losses. So for instance, any area that you see consolidation, right? If somebody is looking for a sell, their stop losses are right above in this area. If someone is looking for a buy, their stop losses are right here. Everybody looks at different things when it comes to analytics, so they all see different things. But the way the market is set up, on the institutional side, they can see all of your orders, all of your stop losses, and what they do is they trade to capture the money before they make the move. When I first figured this out, this pissed me off because I was a victim. But instead of getting upset, I learned from it and I started to use it with all of my setups. Wait until the money is captured, enter in at the key levels, whether it's a supply zone or a demand zone, and then you take it going in the opposite direction. That's it. We did the same thing on USD JPY that we're in profit on. Okay. This area right here was range. Let me pull it over just in case we got some guys on YouTube. Hold on a second. What'd you say? Me too. I'm moving so quick, Doc. What are you referring to when you said me too? All right, so right here with USD JPY, again, we have range right here. And right here at the lows where you see this area range, all of those stop losses are above that level. So what did the market do? It traded, let me delete this stuff first. It traded above that level only to retest the area of structure that was broken right here. And seeing that, I entered the sale and we have big profit on this. Oh shit, we just hit TP3. Let's go, man. So TP3 hit on USD JPY. Win. Yeah. So, damn, hold on. Now we're gonna actually look for this buy on USD JPY. So what I'm gonna do, since we got an hour shooting star right here, and price, it looks like it's about to close above it. We got 4 minutes and 50 seconds left in this 1 hour candle. What I'm going to do is use this area right here for an entry on the buy. Now, since we already broke above that area and captured all of the money, I'm looking to see a push above that to retest the high slightly above that one. Let's go to this daily time frame right quick. All right, cool. So the high or the next level of consolidation that was above that one is this area right here. This is a daily time frame, but you have a lot of candlesticks right here in this area. So you got to keep that in mind when you guys are doing top-down analytics. Oh, the liquidity grabs. Got you. So when you're doing top-down analytics, you got to keep that in mind. What may look like a simple move on a daily, just 3 candles, there are a lot of candlesticks right here in the smaller time frame. So this is the next area of structure that we need to see being tested. Not only do you have all of those rejections right there, if you just look to the left, you got another touch right here. And let's keep going to the left. You got multiple touches at that same area. It fought to break beneath it right there. Same thing right here. You had a couple candles on the daily before it even broke above. So this is a key level, okay? So at this key level, I want to trade towards it and go to a smaller time frame when we get there to refine our entry, okay? So, okay, yeah, I already got that. So that's a 1 to 11. Let me go ahead and close these positions. Ooh, let me leave that right there. And we're risking 3% on these trade setups. So this 1 to 5 trade brung you over 15% of your total account. How long you been trading, Pluto? The support and resistance trading, not trend trading, correct? So it's both, all right? So when it comes to the market, we got to keep in mind it's real simple. So I don't want to get caught up or lost in the terminologies, all right? So you only move in 3 different phases. You got this uptrend, you got consolidation, and you got the downtrends. So what I'm actually doing is, instead of trying to fight to identify the trend, I trap price when it's trading in consolidation. Since you understand liquidity, you know we got money below and above. When I see consolidation, the next step for me is to identify the major level of support, the major level of resistance above, or the major level of support that's beneath it. What you're referring to as supply and demand. Same thing. So in trapping price, I get to trade the true trend, okay? So if we go up here and hit this first, in most cases, this is gonna lead to a downtrend. So it's just about understanding how both work together. Support and resistance trading and trend trading. My own money. Oh, okay. I've been trading for about a year. Got you. No problem, LaBelle. So, I highly recommend demo trading, but for no longer than 2 weeks. And this is why. I'm pretty sure since you've been in it for 6 months now, you understand that the problem with trading, it has nothing to do with strategies. It has nothing to do with risk. It's really all your mindset. So in all of my sessions, some people start checking out when I get talking about that, but I do not care. I will not sell you a dream. You can have the best strategy in the world, but if you do not conquer your mindset, you will forever be a slave to your impulses. That's why we created this mindset series, Structure Breaking, as well as our 6-week journal, so you can not only understand the power of your mind, but be more intentional with your words, and that'll give you the discipline that you're looking for when it comes to executing on these charts, okay? So you want to win, the battle starts within. That's a t-shirt right there or something. All right, cool. So let's go back here. Let me set this alert right now, actually. Give me a second, you guys. USD. Where are we? USD JPY. time frame. Yeah. Stop loss will be slightly underneath that zone. And the target was that daily level. Got you. Cool. All right, so CAD JPY, pretty much the same thing happened. We were looking at where are we? We're looking at this area right here. This was our last TP for CAD JPY. So we hit all targets, and right at that area we looked for a buy. Now I didn't catch the original move, but price will always come back to retest those areas. So that wick let you in this position, and then immediately after you got in that position, this thing takes off. Now we want to see what happens at these highs. In most cases, this thing is going to play around until about Tuesday of next week. So we may see this being in range right here until next week. Put that back. Got you. What was US 30 doing? So look at that. So looks like it's about to retest that double top at the highs. This pattern right here, if you guys don't see it clearly, let me put on this line chart. And if you're having problems with identifying your reversal patterns, one thing that I tell everybody to do is to trace price. Start drawing price. Wherever you see your bear candles, go down. Wherever you see the bull candles, go up. And just get a, that looks sloppy. Let me use this brush tool right here. Or you can use this path tool. Just get used to this. So when you're watching on the candlestick chart, you'll be able to see the patterns clearly without flipping back and forth. You guys have to practice to develop all of these skill sets if you truly want to use this as a tool for your freedom financially. Now, when these patterns are formed, normally you'll see a retest of the right shoulder of those patterns before price continues moving down. That'll also give you a heads up. If you don't reject right here to move towards to break that low, if you get that break above, it's starting to go up. That's another really important thing about being able to identify key levels. There's only one or two things that can happen at a key level. It's going to either reject and move further down, or it will move up. It's really simple. So I use alerts to notify me. That way I don't have to spend a large amount of time staring at charts or guessing about the outcome of the pairs that I'm taking a look at. Mike, what up, Mike? How you doing? So I'm actually gonna set an alert right here. If we get close to that area, I look for taking another sell on US 30. Dang, looking at the daily time frame, we could actually get a deeper push on USD JPY. Ooh. Yeah, so you know what? Let me remove my TP3 and I'm going to just put my stop loss in profit and let that trade setup run. Yeah, so let's let USD JPY run. Okay, oil. Let's see. What else happened in the news? Okay, we got CAD news tomorrow. Got you. Let's get in this Euro JPY sale. It's getting really close to the area we wanted to see a retest. So I'm going to use this entire zone right here as the entry zone. Now, the thing that I don't necessarily like about this trade right now as far as this sell is all of the rejections that we have right here at these highs. I already took a sell from this area right here, and we hit TP1 and TP2. After hitting those two targets, price pulled back. Now the thing that still has me interested in the sell is this daily level right here at the lows. It has yet to be retested. So let's see. I think it'll be smart to go ahead and play it, and if it goes against us, we just adjust. What time is it? 11. Yeah, so let's take this sell. And if we get that break above, we'll look for buys there. So when I'm looking for trades at these key levels, you guys will always see me figure out what could happen if it goes against me, as well as where it could possibly go if it goes in my favor. I do this because it keeps me flexible with trading. I've witnessed too many traders do analytics to come up with a bias with their trade setups. So for instance, let's say they think it's gonna sell. If that sale goes against them, they wait until they see every red candle and add new sales, when this thing is obviously showing you that it's going up. So to remove ourselves away from really being a victim of our own emotions and desire, figure out what could possibly happen if the trade setup goes against you. Can you explain how to set Fibonacci retracement? Yeah. So with the fib, depending on what type of retracement you're looking for, whether it's to the upside or to the downside. That would determine where you place your points. Okay, so a retracement is just a pullback. So in this case, price gave you this uptrend. If you want to use the Fibonacci tool, we're trying to measure to see how far price will retrace to the downside. And if that is the case, US 30. If that is the case, you take your Fibonacci tool, make sure you got your magnet on, and sometimes you got to open up the chart or zoom in a little bit to make sure you get it right. But for this, you'll take it from the absolute low to the high, and then you'll get your retracement levels. Vice versa, if you are in a downtrend, so let's say, boom, we're looking at this downtrend. We want to see how far back price retrace. That looked like about a 50 to 60% retracement right there. So when you're looking at the retracements for the downtrend, same concept, just in reverse. You connect your fib tool from the high down to the low, and boom, there you go, 618, 60% retracement right here. I've been doing it so long, I don't use it anymore. Not as much, every now and then, but not really. But it's definitely still helpful because it's legitimate. It works. So I hope that helped you out. Oh yeah, let me get in this sell Euro JPY right now. And what are you looking for when you sell based on Fibonacci? I don't sell based on Fibonacci. I sell based on what's going on in the market structurally. So I just gave an example of that. You were not here. I will do it again. Give me 1 second. Let me enter in this Euro JPY sell. Now, ain't that something? Cool. Look at that daily zone right there. Get off, magnet. All right. That's another thing. Don't forget to turn that magnet off. Because that thing could be a headache when you're trying to do other stuff. All right. Euro JPY. All right, so back to you, Drea. What up? How you doing? Definition of stoicism. How you feeling? Daniel, how you doing? All right, cool. Now, back to you. Sorry you missed it. It's okay. I'm gonna explain it again. So, with the trade setups, what I'm looking for is the major structural levels or the places that you have the most rejections. So I'll go to oil just to show you. So I showed you guys earlier we entered this trade setup. Let me get my highlighter. The only thing that I do is trap price and I look for liquidity. Liquidity in the market is stop losses. That's all that is, stop losses. On the institutional side of trading, people can see where you place your stop losses. So when traders see price in consolidation, some definitely believe it's still going down, always, and some people will always think that it's going up. Now what the market does is after those orders accumulate, it will reach above to capture your money before moving in the opposite direction. So in noticing that, I stopped basing trades off of things like Fibonacci or indicators, things of that nature, and I stuck to price action trading. So I look for levels where you have multiple rejections. Like this area would be considered a key level. Whether it's support, all of these rejections here, that's a key level of resistance. So in noticing that we're at a key level, in trapping price, same thing. Whoa. In trapping price here, after we got that break below, that lets me know the major direction of the market. I used to do a lot of guessing and it hurt me. So I guarantee you, if you just trap, again, like this, trap price when it starts to consolidate, it's going to do one or two things: break above or break below. In this particular instance, it broke below. This move was your retest, and then you just trade to the next structural levels. So the Fibonacci is not necessary, but it works. So that's why I don't have it on those charts. And in taking this trade setup, after waiting for that break, of course, so after I saw that break and price started to consolidate, I just set a limit order. Price pulled back to activate my trade setup, letting me in the trade without physically pressing the button, because I set that order, let me see, on a Tuesday. It activated on a Thursday. So you just set it and forget it. Now, the same thing happened right here. We had consolidation forming, price broke beneath. I set another limit order. It pulled back to hit that trade to let me in on another sale. So I'm just using the simple concept of identifying range, identifying the key levels on the higher time frames. So that's where you see these zones. I got them from the higher time frames. I like to go and use the daily, the 4 hour, and figure out where we find the most rejections, so I know where to take profit on our trade setups. This was a daily zone at the top, and this is a daily zone at the bottom. So once that daily zone got broken, I'm just looking for the next area to be hit. And this is a swing trading concept. I started swing trading really quick because I used to scalp and try to catch every move, but in doing that, I would forget the direction of the market, and I would end up trading against myself and take crazy L's. How can we get started in trading? You're new to all of this. So if you guys want to get started, we actually set up a trading bundle, a trading essential bundle that's free. And I walk you through setting up your demo account, your live account, so you can actually place the trades with me when you see me online. I let everybody copy my trades for free, to be honest, because I had a huge group of students, and it's really hard to mentor you guys. Some of you guys just don't listen at all, just being honest. But I let you place these trades with me so you can make money if that's the interest. But if you guys want to join the team, you got to start that mindset series, structure breaking, so we can get you in the right place mentally before we let you loose in the market. But to take advantage of the free portion, you go to our website, Trading Essentials. That's the bundle that you get. I show you how to set up the demo account, the live account. I teach you how to place those trades. I teach you how to monitor the trades and give you a trading plan, so you won't go into it blind. That way you just hop on and follow me. But for the guys, again, that want to begin and actually get mentored, we have monthly memberships. This is where you start with our mindset series, understanding the power of your thoughts, beliefs, and actions. And then we also give you our 6-week journal so you can become more intentional with your words. Traders lose trade setups and they speak the worst shit possible to themselves. So we got to separate you away from those bad practices before we get you in the market. But if you just want to trade, hop on and trade for free. This is how I keep my peace, because I just want to see people win, man. So I'm sharing everything that I do, and my results will be yours. But just make sure that the risk is appropriate, because, man, I was having trouble. I have some crazy win streaks, and the risk rewards are always pretty nice. So I run into that customer that wins a couple trades, and I'm saying, hey, stick to 3%. He's like, but man, we just won 4 trades. I'm gonna put up half of my damn account, blow their account. Then you don't see them no more. I don't care how many times you win, man. It's always the times where you lose your discipline and lose your focus that will destroy everything that you gained. So that's why I'm heavily preaching mindset, man. You guys, we are our own enemy when it comes to the market. This shit is simple. It's patterns that happen over and over again. I'm pretty sure most of you guys, your job is more complex as far as the requirements than trading. It's way easier than you think. The only thing that you have to do is train your eyes. Just like learning a new language. You don't just wake up speaking a new language. You got to break down the alphabet before you can put together sentences. Then you do paragraphs and you just grow. Same thing with trading. You got to start with the small things. Understanding price movement. Start with going to the candlestick chart and just drawing price, so you can get a better idea of what you're actually looking at when you're on the candlestick chart. Just simple things like that. And the way we broke it down, we put it into simple steps. We structured it for 6 weeks so you can focus on practicing those simple steps before advancing. And man, I guarantee you, if you just remove yourself from your fear and just practice the things that you see, I will turn you into a master analyst. So now we got all of these trades placed. We are in the positions that we need to be in. Can you do my chart? What are you on right now? Drop it in the chat. We'll take a look at it. Matter of fact, I'll do a couple of them. So, matter of fact, I'll do 3. So we'll look at 3 charts right quick, whether it's no matter which platform it's from. All right, cool. RGIT. Oh, RGTI. Okay, so right now, the only thing that we should do is identify these major levels. This is a major level of support right here at the highs, key level. Down here at the lows, we got your support. Right now, you're trading in the middle of price. A really dangerous area to start looking for trade setups. Okay, on the weekly, this is your range right here. Why do I go so high out with the time frames? Because you have to understand the major levels in the market before you start looking for your trade setups. Now, with this thing being inside of this weekly area of range, it dropped to not only fill this gap, but it just retested this area here. If this area holds, what you'll see is a uptrend. Now with trading, you guys have to always remember it's about probability. There is no perfect setup. There is a chance that this thing could still fall, but it's up to you to protect yourself and make sure that you have a risk reward on those trade setups that's favorable. This would have actually been the best entry right here for you. You're kind of a couple dollars away from it. Let me see, $7. What's that right now? $8, almost $9. that would have been the perfect entry with the stop loss right underneath this area. And since you're in range, I would have traded towards this level and got out, simply because this gap that happened, that's a double top at the highs on the daily. Yeah, damn, you got a double top at the highs on the daily. It's going back. It is going back. There's a good chance it can sell from there. So in seeing that, I would kind of add a couple positions so I can take profit in this area and this area, but also just have something to place just in case it runs to retest this high right here, because this double top has to be replayed. This gap right here was filled with this move, and this gap was filled as well. I definitely believe with everything that's showing, that's a great chance that you can see that move to the upside coming on RGTI. Let me see, 4 hour. So on the 4 hour, you're right on top of the 200 EMA and beneath the 50. When your 200 EMA and your 50 EMA create range for you, you're about to catch a move. So since you missed this entry, my suggestion for you would be to place an alert above this area right here on the 4 hour and right beneath it, and just wait until you get the break. Because on these smaller time frames, all of your EMAs are above price, which is showing that the sentiment is still bearish. So just wait until this changes, okay? You get that break above, that is a better form of confirmation than just taking it from here. Yeah, this looks like this can turn out to be a really nice buy. Yeah. And you just broke above the 200 EMA on the 15-minute. Yeah, that's gonna be a pretty nice buy. Can you set up 1 day minute? What? Type that again for me. Or rephrase that for me. If you're talking about trading on the 1 minute time frame, I don't do that. I don't recommend any of you guys do that either. Scalping is more difficult than you think, man. Scalping is crazy. That's crazy life right there. No, man. Let me take y'all down to the 1 minute so I can show you why I say that. I'm gonna show you on this chart and the trade setup that I just left. Okay. So there's no way you would have been able to see any of that we just did on these higher time frames on the 1 minute. Look at this. Like, really, what is that telling you? That's a bunch of noise. A bunch of noise. And what happens when you trade on this 1 minute time frame is you get used to closing those trade setups before it's time, and you put yourself at a disadvantage. Now let me show you this on the trade that we were just looking at on oil, the trade that we took. 1 minute. Damn. Oh, that is just crazy. Looking at this on the 1 minute. Most people would have closed that trade after you get this break. This thing pulled all the way back to this level, and it's about to break it. So looking at the higher time frames and understanding price, you can't go any further down without moving up. You will never see a downtrend look like this in the market. It almost never happens. You'll always see this going down, coming up, going down, coming up. So I would suggest getting comfortable and used to the actual way that price moves so you can be calm enough to hold these trade setups so you can get a better return. That scalping shit is gonna kill y'all. Think about it. How many scalpers do you actually see trading live and hitting? It's not many. I know a few, but it is not many. That's because that's a dangerous world right there. That is a dangerous world. And then they scalp to make 1 to 2s. That's trash. This trade right now, if we just, let me get this. If we just go to current price, just from holding this trade for a couple of days, we're up a 1 almost to 11, just holding the trade setup. So, yeah, just hold the trades, man. Let them run. Let me see. So you're on the 4 hour, and when you do take the trade within the 4 hours. Okay, so when I look at the higher time frames to identify my zones, we're right here. This zone I found on a 2 hour time frame. Now you can take those trades from the time frame that you find it on, but one thing you got to keep in mind is, in most cases, you'll have a couple candlesticks to print in that area. So if I identify a rejection zone on a 2 hour, most likely it's going to take maybe 2 to 3 candles before it plays out. So that's 6 hours. Okay, same thing with the 4 hour time frame. If you identify a zone on the 4 hour time frame, you have to let it develop. Matter of fact, this area right here, it showed up on the 2 hour and the 4 hour. Even though price kind of wicked this, it still took 4 hours for this thing to make a move to the downside. So you got to be patient. Most people, what they do early in the morning, they get this entry and they'll get out right in here and they're done for the day. And I used to do that too. And then I noticed, like, damn, if I would have just held this trade setup from my original entry, I would have been up crazy. So to me, it's more about understanding the market itself, not about creating strategies to shield your insecurities, because that's what those strategies are. These people are uncomfortable, so they get in and get out really quick. Nah, we got to learn this monster, break it down, and just run with it. I'm telling you, once you relax and get in the flow, it's going to tell you everything that you need to know. It's not fast enough to catch price. What you mean? But then it's not fast enough to catch the price. As long as you set your orders, it's going to activate whether you're there or not. So it's not about speed when you're trading on those higher time frames. Like even with that CAD JPY buy that we had, on a 3 hour time frame, we knew this area here had to be retested. With my highlighter right here. So the same thing I was showing you guys earlier, price created consolidation. People are placing stops above for the sales, and the people that were in their buy, they had their stop right here. It dropped to capture the money to hit this zone on the 3 hour. But look, it took 1, 2 candles before you actually got that move. But look at the move that you got. That's a crazy move. And it's a great chance you'll see a break above that high. So it may take a little longer to develop the setups, but it's not about speed at all. You just let it happen. It's more so seeing it, setting it, and just let it happen. Let it come to you. When you remove yourself from chasing the market and just let the trades come to you, you're definitely going to have better results. So, what does the clock say? I'm going to open up for a couple questions. We'll give you guys another 5 minutes, and then we're going to shut it down for today. I really appreciate y'all hopping on and being active. That's fun. Where is it? So any questions, any charts y'all want to take a look at? Let's go ahead and take a look at them now. Let me know what you got. and we'll do another few charts. So we got maybe 2 more charts. I'm gonna do top-down analytics for you guys and share what I think could possibly happen.
So she's someone that's your type?
Whoa. Okay, cool. All right, YouTube. So how do you get started with us? We're gonna share that in a minute. Give me a second. Let me get all of the other questions answered before we go there. I'll give you guys the steps. All right, cool. You want to look at QUBT? Let's do that. Give me 1 second. Let's pull it up. QUBT. All right, let me go back to the chart. All right, same concept. Woo. Bro. Wow. Wow. Okay. Same concept. Let's start out here. This thing looks ridiculous, by the way. So right here, we got all of these rejections at this level. When it comes back, there's a huge chance that that can break. I would definitely pay attention to the news on this company. Yeah, this is terrible. I would suggest trading something that's a little more stable. Yeah, this thing is terrible. But at those highs, that's the area that you're looking at. This area right here, this was definitely a key level, and it looks like it's about to be broken. This is the daily. You got price trading underneath this level now. Wow. Let's go down. All right, so right here, let's just trap price. This is your area of range right now. I'm going to change the colors of these. This is definitely still our key level. I'm just changing the color right now. So you got price traveling in range at the lows that's at a key level. I wouldn't do anything with this. I wouldn't do anything with it. Set the alert right here beneath and set an alert right here. There is a chance, since we're trading at the key level, that you could see a reversal moving this thing to the upside. We definitely have this gap right here that needs to be filled, and above, hold on a second, and right here above this area of range, this high right here needs to be tested as well. So what I mean by stable, I mean something like, I'll go to a couple of companies to show you. This thing is about to retest where it started at. Like, that's not stable at all. We want to see something. Let me see. What price range was it? Around $8. Let's see. Let me see if I can find something cheaper than that. How's Piton looking now? This is actually better. It actually gives you some swings in both directions. Wow, look at this. Yeah, so we took those sales on Piton right there. These swings are a lot better. That thing looks like it's on the verge of crashing and being delisted from the market. So you can still find trade setups on anything. Just give you an example of something that's a little more stable, but that's still close to that price range. These are the all-time lows on this thing right here. Okay, but again, as long as it's still on the market, there's possibilities in it. But with you, we could actually bring this alert down a little lower. Put an alert around 570 to let you know if it breaks above, and we'll put the other alert right around 458. Yeah, that was Piton. So with this thing, no need to guess. Don't do it at all. Just let it tell you what's gonna happen. If we get that break above, there's a great chance that this level will prove to be support, but only if you get that break. So wait for it. On a 1 hour time frame, let's see what an EMA. This looks pretty good as far as our EMAs. So when you're looking for reversals, one thing you want to see is your 50 EMA, and your 200 EMA getting closer to price. You want to see them damn near touching. Yeah, this is beautiful. Yeah. So whatever direction it's going in, it's going to be within these next few weeks. So whether it's going to sell to destroy itself or break above to regain those profits, you're going to figure out, I want to say damn near by next week, Tuesday or Thursday. If this holds, this will be a pretty good buy. Pretty good buy. So we wait on that break above right here. Now as far as your entry, this is your level of range right here. When you get a break above, wait for a few solid candles and then you'll just enter on the retest. Your stop loss definitely has to stay beneath this zone and you just trade to the next area. That's a easy 1 to 8, 1 to 9. But again, don't get too excited just because I said it looked good. Be patient. Be patient, because this could definitely fall and take off. So we got one more chart. Y'all want to take a look at it? If you just got any questions about the market, let me know. Why next week? Because of what's going on structurally. So with reversals, when you see them in the market and you see those EMAs, that 50 and that 200 start to touch price, you actually got to let it develop. That's one thing that I learned really early. In most cases, you'll see a lower low happen before you get that reversal. So in waiting, price is going to show you the true direction. And I wouldn't take it now because it's just too early. Next week could give you a better idea. You have more clarity. That's why we're going to wait till next week. All right, D, EMAs, that's how you know. The EMAs only help me when I'm looking for reversals, but I don't sell based on the EMAs. I'm sorry, I said that shit backwards. The EMAs help me identify the reversals, but I do not take the trade set up just because the EMAs are close. I want to wait till I see a break. So let me go back to that chart for you to give you an example since we're already there. So this is the confirmation. Hold on a second.
Crunchy, delicious.
Oh, we got commercials and everything playing in the background. I'm tripping. All right, cool. Hold on 1 second. All right, so we got these EMAs, this 200 and this 50 EMA getting closer to price. That lets you know that the move is about to happen really soon. This one is kind of too far away. Like I said, I want to see them where they're damn near touching price. Like on this smaller time frame, this is getting closer. In most cases, even if it's going to reverse and go to the opposite direction, you'll see a bounce off that EMA. It'll create a slightly lower low, and then it'll make that move. So I start waiting to the week after because of that particular reason. I would see all of these things set up, I would get overly excited, and I would jump into my buy early. I'll go and profit briefly, it'll retest that 200, stop me out of the damn trade, and then it'll make the move without me in it, because at that point I was scared. Like, shit, I thought it was going to buy. Now I'm looking for sales, and this is ripping. So yeah, just wait. Just wait on that one. Now let me see that other chart. Oh, on TradingView, if you're trying to look for EMAs, you go to indicators and you just put EMA or moving averages. Moving average exponential. That's the one you're looking for. And you can put the 50 and the 200 just for those particular reasons. Cool. Let me put in that other chart. What you got? D, X, Y, Z. All right. Okay. All right. Man. Okay, this is relatively new. Okay. Now with new trades like this, there's really no stability. We don't know if this low is the low. It could actually break this. So when I first started trading, I traded an IPO called NEO. And as soon as it came out, I bought that bitch. I was putting trades everywhere. Because I was like, this is going to be the Japanese version of Tesla. Hibbity hoo, hibbity blah. And I bought into the news. And the exact same thing that you see right here is what happened to me. I was in, and that thing just dropped. And it stayed there for about 3 years before moving up. So with IPOs, I really don't like them at all. I really don't like them. Because I can't say for sure where structure is because there hasn't been enough time. Now, just based on what we see in front of us, this is our structural area of resistance at the highs. This is the structural level of support at the lows. See, look at this. The 200 EMA just started printing on the daily. Yeah, we gotta get to something that's stick to some companies that's been in the game a little longer. So same concept. This is a key level right here. Price struggled to break above before falling, and you got a couple candles right here before it decided to move up. That was the daily. We got a double bottom right here that hasn't been retested either. So let me go to the line chart just in case you guys can't see it. This double bottom, which just so happened to be right underneath liquidity, has a good chance that this move was a liquidity grab to capture the stop losses right here, and it could be used as support. But again, same concept as the other trade. If it breaks beneath right here, you want to get out. You want to get out of that. Let's see. Let me zoom in a little bit, make sure I got that thing on there. Yeah, now it can go a little lower. Let me see what those EMAs are. So the exact same concept with this trade setup. Both of them look like you have a potential for a really nice buy setup, but this 200-day EMA is too far away from price. But the way that it's leveling out like this is a really good thing. This is good. That's good. But we want to definitely see a lower low being made before we show interest in that reversal. So again, this thing may pop like next week around Tuesday or Thursday, depending on what's going on in the news. So I would set an alert beneath this low right here, just to let me know when it travels within my zone. Set an alert beneath that zone and wait until you get a break above this 200 and take that buy. But I would only take the buy from out of the zone, not above it. That's not good enough for me. So that'll be it with that, man. Everybody that stayed on, and I really appreciate you guys. We're gonna go ahead and I guess call it a day. and just let these trade setups run. So again, for the guys that want to trade with us, you don't know where to begin, you can head to our website, ProfitTakersEU.com. Maybe I should put that up here for y'all. Let me see. How can I add a source right quick? Give me a second. Text. I went to OBS. I had to go back to YouTube. I don't know OBS like that. Let me just go to the damn website. So ProfitTakersEU.com. This is the site, you guys. Go to the bundles and go down to the Trading Essential bundle. You get that for free. So you'll be able to trade live with us. Outside of that, you'll get the free trial to our Mindset Series, Structure Breaking. We spoke about it earlier. We have to get you in alignment when it comes to that mindset. And along with that series, we use our 6-week journal to help you with your words. We also have a few books available on Amazon. 6 Steps to Trading with Consistent Results. Covers all of the concepts that I go over in the charting sessions and in the live trading sessions. And we got log books as well. You guys have to log your trade setups and your emotional state in the process of placing these trades so you can identify what the problem is so you'll know what to fix. We got merch available as well, so you guys support the vision, support the dream, and if you would like to become a member, you can start with the beginner bundle or upgrade to tier 2. But as always, remember you're only one trade away from living. Why fight to stay the same, man? Love y'all.
I've waited in darkness for all of my life. Now I wanna be.
No definition. You need a computer. Definitely invest in a computer. The phone won't be enough.